The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it's another tough day in the soy complex, giving up about another 20 to 25 cents across the futures trade. Corn largely gave back the gains that we got on Monday. Is a little more mixed in the wheat trade. We did find some green on the screen in cattle as well, and the stocks too. A good day in the outside macro markets. What do we need to take away from this market trade action we're getting here post-August WASDE report, crop production report, and more? Joining us for a conversation, Tyler Schau with agmarket.net is with us. And Tyler, welcome back to the program, my friend. We both wore red for the occasion today, I see. Another down day in this soy complex. Man, oh man, it's at this point, it's almost comical just how much we are losing here and the bearish weight that is on this trade. Another 20-some cents off beans on Tuesday. You know, I joked as well, why couldn't we get it all out of the way on Monday? I said that to you before we went live. Just a tough, bearish picture overall in this grain trade led by the soy complex, Tyler.
Yeah, I mean, I had it pointed out to me earlier today, and I don't know where this came from. Just a customer pointed out. I went and looked, and it was true that if you wanted to sell the high in the calendar year 2024, you needed to sell the first 20 seconds that the trade was open on the first trading day of January in both soybeans and in corn. And, you know, one of the tough things about that is, there was a lot of chatter earlier this year that I might quote this wrong, but I think every year since 2001, at least in corn, we have gone back to the January high at some point throughout the year. That looks really tough right now in December corn. So this might be the first year in many years where that doesn't hold true. Our counterparts at JSA at the beginning of every year, they run a high-low model of what you can expect the high to be and what you can expect the low to be. We've already eclipsed that low on November soybeans. That was at 975. So we've gone even lower than what that model suggested the low might be. It's just a tough time here marketing crops in 2024.
Very tough, very, very tough. Well, let's talk about this a little bit more. And I know there's a lot of folks who are struggling with this overall picture right now. We've talked about this multiple times. They maybe haven't marketed enough of their crop. I'm mainly talking new crop here. Old crop is a totally different conversation. But the talk is out there that there's a monster crop and the good is outweighing the bad. And you look at this pullback in prices. I know it's going to squeeze margins and more. So, I mean, and I know you're getting a lot of these questions too, Tyler. I mean, what do we do at this point in terms of our marketing? I mean, what are some of the things you're telling guys and gals out there as they're looking at their position right now, particularly soybeans and corn?
Well, right now, I mean, let's be honest, late August, early September is usually not a good time to be marketing grain anyways. You generally want to beat this time frame. We still feel like there's a lot of old crop corn that's going to get marketed over the next few weeks and really months. We know there's going to be a big new crop. I shouldn't say we know. We feel like there's going to be a big new crop. I mean, there's time for stuff to change, but given the data we have right now and the information and stories we're hearing from our producers, we feel like it's going to be a big new crop. So we really feel that this pipeline is going to, have some massive congestion problems really for the next 2 months. So unfortunately, it feels as though we're going to see more pressure on prices for at least the next 4 to 8 weeks. And so, what do? You go ahead, if you've got bushels that have got to get marketed off the combine, don't be the last one to get in line. Go ahead and price them now. It's tough for us to come up with a case where basis gets materially better. It's tough for us to come up with a case where futures get materially better. So we're out there actively making some forward contracted sales, trying to get those bushels committed. The good news, we've talked a lot with Ag Market about the 2014 comparisons on corn and beans, right? I should back up. The bad news is there's more downside pressure to go. The good news is we bottomed those markets in late September, early October, and put 40, 50 cents back on the corn market, put $1 back on the soybean market. So if you get ahead of it, you make some sales, and we do continue to sell off here into the next 6 weeks, 8 weeks. There's an opportunity to re-own some of those bushels and capitalize on some of that moving forward. Taking that a step further, if we look at soybeans, one of the things that I would also caution as bad news is if you extrapolate that 2014 comparison out and look at November of 2015 soybeans, 1050 ended up being the high. We never could eclipse that. So we were just there a few days ago. And so basically what I'd say is on new crop beans, be looking for if we can rally back and get above that or near that level, might be an opportunity to step back in and make some sales for next year's crop. And I know I'm jumping a whole crop year ahead, but you take a look at the world balance sheet on soybeans, and it's not a real rosy picture for prices.
I think this too, and I'll make this comment. I've said this many times, and I know you and I have talked about this before. I think at this point in this juncture, farmers are resilient. We've weathered these downturns before, but you can't necessarily be afraid to use the tools in the toolbox. Some of the re-ownership you're talking about, things like that. There's ways to navigate this, and you can't necessarily just, play the cash and that's that, or store and ignore, things like that. It feels to me like you can't be afraid to get into the weeds a little bit and work with a trusted advisor to try and navigate this market, right?
Yeah, I mean, well,
easier said than done, right?
Yeah, easier said than done. Yes, the key is finding someone that you have a relationship or can feel like you can build a relationship with, and then reaching out and contacting them, as well as having, hopefully they contact you also. But one of the things I will say along that point, because I do deal with customers on a daily basis, the customers that's making contact with me the most is probably also the ones that I'm making contact with the most in reverse, if that makes any sense. If you do have a broker, if you've got an advisor, don't bury your head in the sand because you didn't do enough. Make sure you're making contact, reaching out, asking them, what do we do next? Because human nature is we're gonna service the clients that are in the back of our minds, or I should say the front of our minds, and that's usually the one that's calling a couple times a week, maybe even daily. I got several of those that call almost daily. A lot of times they apologize for it. I then don't apologize for calling me. That's what I'm here for. And the more you call, the more I'm thinking about you, and the more I'm probably going to be paying a closer attention to your account, because believe it or not, it gets a little wild in the office here as well.
Yeah, no, very, very true. Good points. The wheat markets, you're up in spring wheat country, North Dakota. I know kind of the same bearishness in this wheat trade, maybe a little bit more stable picture. I can't believe I said stable and wheat in the same sentence here, but talk about the wheat markets overall. Any big notes for you from the USDA reports? What's your feeling about this wheat trade overall right now, Tyler?
Well, I would agree on the stable and wheat. I always tell customers wheat's kind of like that crazy girl you dated in college. You never really know what's going to happen. We got a little bit of a surprise with the WASDE report yesterday. If you think back to the July WASDE, the USDA came in on spring wheat production and was way above where all the analyst estimates were. And then in this month's print, it was the opposite. Their production number was actually lower than where the analysts were. And so a lot of analysts were expecting even larger yields than what we saw in the July report. USDA actually lowered spring wheat yields about 0.5 bushel per acre, as well as also lowering the acreage by about 500,000 acres in spring wheat country. So pulled the production number down, stocks to use came down a little bit. And yet all that said, we got a couple pennies higher in spring wheat yesterday, basically continued unchanged today. I'm in wheat country. I'm having a hard time buying the half a bushel reduction in yield just with the early reports that I'm hearing. Some really big yields, really all across the state of North Dakota, from the Red River Valley, which is known for their large yields. Now they are having some issues with protein contents. But as you move west, yields are much larger than normal, and early reports are of relatively good protein content. So we'll have to kind of see as we move forward. We remain fairly bearish wheat prices again throughout the next 4 to 6 weeks, because feel there's going to be a lot of pressure on the system with big crops coming off the field. And there's still a lot of farmers holding old crop bushels of wheat that they never sold from last year.
Tyler Schau with agmarket.net is our guest analyst here today on Market Talk. Tyler, let's go over to cattle trade. Some green on the screen there Tuesday. Feeders led the way. Your perspective feels like we've kind of tiptoed into the week here in the cattle markets in particular. I'm going to be watching cash this week as well. And really, this cattle market has started to feel like it's got kind of choppy, range-bound, toppy even. What's your feeling right now in cattle here as we get to the middle of the month?
Well, the yen carry trade, which I'm not going to go into all that. I'm sure some people have talked about that blew up financial markets. I shouldn't say blew up, but sent financial markets south there about 10 days ago. That really carried over into the livestock markets, especially cattle markets, pulled them down. And that's one of those things we've been saying for well over a year. What pulls this cattle market down is probably not going to be fundamentals. It's most likely going to be some larger macro event that is going to be really tough to predict. And it finally came in and clipped it here, a couple weeks ago. Since then, since that meltdown, we're just kind of consolidating now. And that's the question is are these markets, finding a bottom, and are they going to push higher? Or is there another leg lower? Time will tell, as usual. I still contend the fundamentals haven't changed. I'm not in the camp. I hear some people talking about heifer retention, and that's really, that's going to be the next wave pushing this thing higher. I think I've even said on this broadcast before, I'm not certain we're going to see major heifer retention, at least in the near term. One, you've got really high interest rates, which make it really difficult for a young person to enter into the industry. Two, you've got a lot of older producers that are actually looking at, how do I exit now, right? With high cow prices, like I want to sell those cows. So if I'm a young producer, I'm not really into going out and buying a lot of high-priced heifers and borrowing a lot of money. I'm going to look at some type of scenario where I can go in and maybe buy out a producer that's looking to retire. So I think there's going to be some of that. And there's just a whole lot of people got burned in 2014 into 2015 that just aren't really in that market where they really want to go chasing that bred heifer. And so I'm still of the camp that we'll see some heifer retention. But I don't think it's going to be the full-blown heifer retention that we saw in 2015, which just upset the apple cart and took the fundamentals the opposite direction. So I still think fundamentals stay strong on cattle. That feels like it could provide some support. We're seeing the cash markets kind of leveling off. The feeder cattle index got blasted really last week, and yesterday's number was down $4. Today, our guess is we're probably only going to slip 30, 40 cents on that. So that's starting to feel like it's going to level off. The fat cattle cash market kind of leveled off. The 5 area weighted average number that got printed yesterday was actually a few cents higher than a week ago. So there's some settling going on there, which should keep those markets somewhat supported.
That hog trade too, I feel like that's a little bit of the case of that pork and bean trade maybe at play with the soy complex under pressure. That put pressure in hogs. Some Chinese economic concerns out there too, I think, weighed in. And then you got August is going to go off the board later this week, holding a pretty sizable premium to October. I think a lot of those things may be at play at the hog trade Tuesday. What do you think?
Yeah, that, and in the WASI report, they did kind of give a refresh on the proteins, and then they had trimmed the export number, I believe. That's one of those that we don't look at as closely as we do the corn and beans. Skimming through it, the USDA is lowering their export target for pork. So I think that kind of played into this market kind of selling off here again today. It is going to be interesting how that spread, there's going to be that monthly continuation chart following tomorrow. There's going to be a big gap on that thing. So it's going to be interesting to see how the technicals play out, what kind of signals that give us. But massive discount to your October and December hogs compared to where August is going to go off.
Tyler, good thoughts as we wrap it up here today. Anything final you would share or reiterate for producers right now?
Well, I'll go back to the statement I made earlier. Sometimes it's real easy to be disgusted by these markets, and I don't blame anyone for that. But I don't know that now's the time to bury your head in the sand and just not think about it. There's still things that can be done, and there's ways to manage risk even at these levels. So keep paying attention. Keep your marketing, your focus on marketing, and we're going to grow crop, and we're going to grow crop next year, and all of it's got to get sold, moved, and so no time to ignore it.
Well, folks have questions. I know you guys have a lot of resources available online, a phone call, many ways to get in touch, isn't there, Tyler?
Yeah, check us out, agmarket.net. All of our contact information's there. We've got a lot of offices from North Dakota all the way down to Tennessee, and we just opened another one in eastern South Dakota here this last week. So check us out.
Yeah, more info at agmarket.net. With that, Tyler Schau, always good to talk with you, sir. Thanks for joining us here on Market Talk today. We appreciate it.
You bet. Take care, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.